Speaking of business news, your credit score, you look at it a lot, right? Credit score is apparently going up. Mortgage giants making a big change. It means it's easier than ever before now to get a better credit score and to buy a home. We're talking about both of those things today, kind of a combination with some experts to break it down for us. In studio, Jeff Obrasky here, and Julie Morris as well to talk about it. I know it's a big kind of stew that we're going to talk about, but let's talk with you, Jeff, first of all, about some of the changes recently to the credit scores. Some people are going to see their credit score tick up.
They are. The credit agencies have decided that for the foreseeable future, if you have either liens or judgments on your credit report, they're no longer going to report them. There have been too many inaccuracies that they feel that it's in the consumer's best interest to make sure that if they are reporting them, they're accurate. Therefore, they're estimating the average credit score will probably go up between 20 and 40 points.
Well, that's nothing to shake a stick at. That's pretty good as far as that goes. When it comes to buying a home, that means more people might look at the options and say, okay, now I can get into the market. Is the market good right now for buyers or sellers? I know that's kind of a general statement, and it's all about context.
Yes. It's great for buyers. It's great for sellers. It's a seller's market. It's up 149 is the seller number versus 100, which would mean half are up, half are down for buyers, for sellers.
So it's tilting in the way of the sellers right now.
Right.
But there's still plenty of buyers out there. You were talking about the inventory in Phoenix still cannot catch up.
It's a difficult time for the homes under 200,000, and as you go up from there, it gets a little bit easier. But it's a fantastic time to buy because interest rates are lower than they have been, and it's a good time to buy because we have it's just availability of mortgage. Like you said, it's much easier to qualify for a loan.
And looking at the Phoenix market in general, I mean, we were talking about this just off the air about the roller coaster we've seen from the depths of the 08 recession and then kind of pulling out of it, you know, slowly. I mean, we're still on an upswing, right?
We are.
Oh, absolutely. And it's easier now than it has been in the last 8 or 9 years to qualify for a mortgage. Fannie Mae also announced that they're going to be raising the total debt-to-income ratio from 45% to 50%. So a lot of those young millennials that have good, new, fairly high-paying jobs but are saddled with high student debt,
sure,
even if they don't have to make the exact payment every month, more of them will now be able to qualify for conventional borrowing. So it's opening the doors to a few more buyers around the edges.
If you were to look into a crystal ball, Julie, right now, obviously predict us for what's going to happen over the next 5 years, all joking aside, how does it look right now? I mean, pretty good for sellers, but for buyers who might want to get into the market, are we going to see something favorable to them soon?
It's good for both buyers and sellers. For buyers, it's a good time because the interest rate overall, if you look at 50-year average, 50-year average is around 8%. So whether it's a 3 and 3/8 or 4 or 4.5,
yeah,
it's just much better for buyers, and it's less expensive to own a home than it is to rent.
Mm-hmm. Yeah, rent is really high right now.
So yes, and rents are going up. The values, the appreciation is going up, but there are properties that are available, and it's just a really good time to buy. We're expecting a shortage of inventory for several years.
Okay.
So if you're thinking about buying, now's a good time to buy. It's easy to buy, and there's more availability. It's easier to qualify for a mortgage.
Then we're going to say stay tuned on that as things change up and down. Jeff and Julie, thank you guys so much for being with us today.
Thank you.
11